Welcome back to the Gold News Channel. My name's Kerry Stevenson, and today, all the way from Ireland, I'm talking with Stephen Flood. He is the CEO of GoldCore. That's right, a core of gold, GoldCore. It's a company which guides investors in delivery and storage of gold, precious metals, silver, platinum, palladium, all those good things. And the interesting thing, and why I was keen to have a chat with Stephen, is he began life as a derivatives trader at Goldman Sachs. Now, a lot of you will know that I'm often saying that derivatives, it's all paper-based, and now we've gone from him being a derivatives trader at Goldman Sachs to coming into what I call the real stuff, the sound money at GoldCore, which is all about precious metals. So he advises on gold and silver purchases and a lot about the trading and the risks around gold, silver, precious metals. And they're catering to people all around the globe. And the closest one to us, I believe, is Singapore. But coming to me from Ireland today, Stephen Flood, welcome to the Gold News Channel. Fantastic to see you. Thanks for your time.
Oh, it's so great to be here, Kerry. Thank you so much.
Well, first up, let's start with just a brief overview for my investor audience over here. Who are GoldCore?
So yeah, we've been around for almost 20 years now, which is incredible. I feel very old saying that. And we're a specialist, I suppose, in the provision of precious metals to investors. And that comes down to buying and selling gold and silver and platinum where necessary, and storing it and shipping it to clients all around the world. So we've kind of grown our business one client at a time. We manage around $300 million in assets at this stage. And we have a fantastic team here. We're connected in with all the major mints and all of the major refiners in Switzerland and around the world. And we make a two-way market very, very quickly. But ultimately, what comes out the other side of the process is a physical bar of gold or a coin that's physically stored on a shelf in a non-bank vault in one of our 11 vaults around the world. So what we get to is a really high quality end product for the customer, something that's physical, tangible, that's inarguably actual metal, and there's no derivative attached to it. There's no contract, there's nothing fancy. It's yours, you own it, and there's no question, there's nobody between you and your gold other than there's the custodian, the storage service that's there to keep it safe. And so a typical customer of ours would be, very, very typically intelligent, of course, students of history. They have a healthy skepticism about the matters around the world and what's happening. They don't mind asking questions and learning. They're quite humble in that regard. Sometimes they're very opinionated too, but it's okay, it's fine too. But they see gold as that really, really important element in a diversified portfolio that sits there and acts as almost like a financial insurance. So should something go wrong, and it'll probably, think it's a, I suppose you're looking at that black swan. I think that was discovered in Australia in the 1800s. But that black swan, which is a statistical anomaly, something that shouldn't happen but does happen, but it can have massive consequential effects on people's lives and portfolios and communities. When those things happen, you have something like gold in your portfolio, and the idea is that it actually starts to appreciate and take the sting out of that correction that you might be feeling in other parts of your portfolio. So it really it's a great bedfellow for other elements in your portfolio. And that's what we do. We're right into the physical side of things. We deliver gold all around the world, and we store gold and silver in vaults around the world in a very safe manner.
It's interesting what you said before about, your clients are students of history and they like to ask questions. Here's my question for you, Mr. Flood. You were a derivatives trader at Goldman Sachs. You're now the CEO of GoldCore. They're very different things. And you mentioned paper before. One of the questions I have for you is, how did you move from that environment of being a derivatives trader into running GoldCore, where you're talking about the physical side of, I guess, money, sound money?
Right. Well, it wasn't by design. It was by complete accident. I tend to kind of, I take life as it comes, and I enjoy life, and I take my opportunities. And I don't mind if I'm not successful in something, I'll keep trying or do something else. So I'd gone to America as a young man in my early 20s with a backpack and $1,000 in my pocket, and I had the dream of becoming a stockbroker or trader or something like that in any institution. I didn't care where, but I was very, very IT focused. I knew an awful lot about financial technology. knew a lot about systems and a bit of programming as well. And when I got to America, I realized that those skill sets really, really set me apart from other people. So I did very well in banking, at first at Bankers Trust, which is a very well-known bank in New York, which would have actually created the first option contracts back in the day, and blew up, I think, the state of California's pension plan with option contracts as well. It was a big scandal at the time, or Orange County, I think it was. And so I worked in that bank, and I learned an awful lot about, you know, the financial markets and equity trading and bonds and Latin American markets as well, and the technology. And then one of our clients was Goldman Sachs. And when Deutsche Bank took over Bankers Trust, I had some contacts in Goldman, and I was able to move over there. And it was absolutely amazing. It was an incredible powerhouse, still is. Great people working there. I know that gets an awful lot of bad press from certain quarters, but when it comes to the incredible efficiency and the amount of clout they bring to the market, it's like no other company. So it was, for a young man in his 20s, you know, working in a company like that was just such an honor. It was great. I learned a huge amount. And the area I finished up in was equity derivatives, and they would have been responsible for a lot of derivative contracts, all manner of contracts out there. But on our desk, they created the first ETFs were actually created. The Triple Q was called, or the S&P 500 ETF was first launched. They now command most of the flow in the market these days. That structure, ETF. And my role there was within the program trading group, which would do massive program trades for the stock market internationally, in Australia as well, and also in Europe, and also in domestic US. So I would have worked with a crack team of professionals who would have worked with pension funds around the world and got them into the equity markets in a very, very controlled manner, and got them the very best execution as well. So it was an incredible honor, and I learned an enormous amount. Then I got married, and then back in 2001, just after 9/11, and I decided that it was probably time to take a break. I'd been in the financial markets for quite some time, and I was looking to get back to Ireland with my new beautiful wife. And we decided to do a trip around the world for about 4 months and make our way back to Ireland. And we visited Australia and New Zealand and all around Asia. And my God, we had such a great time. Loved Australia, just so beautiful, amazing people. And we made our way back to Ireland, and my good friend Mark O'Byrne from school, you probably know Mark O'Byrne. He's quite well known, and he had started GoldCore, and then he was looking for some help. So I came in and joined him, and we took a half share each, and we grew the business from very humble beginnings, slowly but surely, and over the last 18 years. Mark actually left GoldCore last year, and he's now looking at other ventures, and we're still great friends, and he's doing very well for himself. And I've taken the reins of the company, but I'm very lucky because we have an amazing team of people here who've been with me for many, many years, and who really make everything work so smoothly. So we're doing very well, and it's a very efficient operation.
Well, one of the things that I really wanted to understand, Stephen, is you've seen it. You've been in the markets. You've been in the you've done the Wall Street, the New York, the big banks, etc. Right now in 2021, as we come into 2022, post-pandemic, or maybe even still mid-pandemic, who knows? A lot of printing of the paper going around the world. People are confused. People are concerned. People are looking at the market saying it feels a little bit frothy. I'd love to get your take on what you're seeing at the moment, because I know from what you've said in the past that you are a diverse, you say have a diversified portfolio. And you said earlier in your chat that physical gold, physical silver is there in case everything else gets very wobbly. What are you seeing in a macro way at the moment with what's going on? A lot of money printing, or currency printing, I should say, going on. What are you seeing at the moment?
Well, I think you're looking at, I think, what's been termed competitive currency devaluations, which is to say that countries need to compete and their industries need to compete, and those who control the currencies are seeing other countries printing money and devaluing their currencies, and have been doing so since the last financial crisis. And when one does it, the others have to follow, or else they risk being lost and becoming uncompetitive. So I think it's the first time I can remember where you have a unified currency devaluation policy amongst all central banks. And what that tends to do is it's a form of taxation, in my view, in my opinion. If you work hard and you make money and you pay your taxes and then you have your savings, and then the currency of those savings is then devalued further by the virtue of somebody else printing more of it, you're being taxed again. And unfortunately, that same operation increases the asset prices that people have to pay for homes and stocks and other assets. So the people who held those at first, that is the richer people in society, they see massive appreciation of their assets. And those who are working maybe salary, with salaries and going month to month and paying their bills, they find themselves falling behind because they don't own the assets in the first place. Yet the cost of living starts to rise. So we've had this massive money printing. The first part of that is this asset appreciation, which is unbelievable, in terms of almost every stock market, but in particular the United States. And now what we're seeing is that this money is now being is now going into the broader economy, and you're seeing supply shortages and demand hikes and inflation, which was always going to happen. And the authorities that be absolutely knew that this would happen because history told us that this would happen. Yet they didn't tell the people. The politicians didn't tell the people that this would happen. They kept saying it's going to be okay, it's going to be fine. Inflation, up until very recently, inflation was known as something that was transitory. Which is the most ridiculous statement you could possibly make. You don't go printing. I don't remember the numbers. It's $20 trillion. I mean, literally,
and rising.
They've massively increased the amount of money in circulation in the last few years. And once you do that, you get a cohort of politicians who will promise you to solve all of your problems, and with the money that they now can print. And what they're doing is they're taxing tomorrow spending the money today. And ultimately what happens is people like you and me and our neighbors and people who don't maybe even know anything about gold will suddenly see the cost of living going up, their wages going down, the relative nature, but the ratio between the two will tell them that the future is now uncertain. The future is going to be more expensive. I need to hunker down and do what human beings have done when a storm is on the horizon. They will hunker down, they will go into a cave, and they will stay there until it's safe to come out economically. And that is a recession. And it'll be a global recession. And it could, if it's not managed properly, turn into a depression, which is extraordinarily dangerous. And don't think this is transitory. Because you look at human history, look at the Dark Ages, look at empire, look at Greece, look at Rome, look what's happened in the past. When you play with the plumbing, you mess with the physics of money, and you do so for short-term reasons, you're playing with fire, and you can set society and humanity back generations if you don't by damaging the actual system. It's an extraordinarily dangerous time. And what you will see is asset price appreciation, where valuations go to the extremes. Where you're seeing the crypto is not necessarily because of a new technology. A lot of that is actually just people not being able to make money in a savings account, looking to throw their money out anywhere and following a trend and a theme, and not actually having a clue about what the fundamentals are. And that's what you're seeing in those markets in large part. And so you're going to see lots more bubbles, lots more tulips appearing across the market. And then all of a sudden, it'll just be all sell. There'll just be people looking to sell, and then panic sets in, and it just dives like you've never seen anything. And I think it could happen on a global basis. So we're really in dangerous territory.
You said just a moment ago the physics of money. And I love what you were just talking about then, because I think you're absolutely right that we are living in dangerous times. What do you mean by the physics of money?
Well, I mean, like it's just standard accounting. If you start printing money, you're adjusting one side of the balance sheet. You need to have every debit has a credit, so you can't just create money. If you're creating money, or you create debt, you're creating a liability. Somebody has to pay that back. Otherwise, somebody who owns it doesn't understand what they own. And if you cancel one side, you cancel the other side too. So there's it's standard there's no free lunch. The whole function of money is to have a something that's preserved, that you can then use within an economy that's trusted, that's a unit of account. But if you have one party who's not been held to the same rules as everybody else and is then buying up government bonds in order to maintain a narrative of normality, which is what they do, what you're doing is you're just playing, you're dicing with danger, in terms of eventually people are going to look through that and see what you're doing, that you're just actually creating a veneer of normality when behind it is actually quite corrupt. So, I mean, if you look at the government bond market, for example, you have government bonds for years would tell you that everything is fairly okay. Yeah, they're very low yields. But in reality, if you went back 20 or 30 years, we actually had a real bond market. If somebody like Boris Johnson was elected and would go on a stage and start talking about Peppa Pig to an industry group, which is what he did 2 weeks ago or 3 weeks ago, and do that, and you would see people losing faith in the British Treasury and the British bond market. And
he actually said Peppa Pig. Are you serious?
He started talking about how he went to Peppa Pig Land or whatever it was, and talking about, using analogies of Peppa Pig in order to describe the economic condition of the UK industry. And he was at a really, really, highfalutin affair, in London with a lot of big industry heads. And, these people are very serious people, and the world was watching. And he would sit up there and he was just waffling. I mean, he was just talking off the top of his head, trying to be funny. And, he has this style about him, but really he's somebody who is waffling a lot of the time. But my point is that if somebody as that important got up 30 years ago and started talking like that, what would have happened immediately is that the government bond market for UK bonds would have sold off immediately. The yields would have gone up, and the market would have said, there's a risk premium in your bonds because we're not sure you could carry the day, and we're going to look for more yield in order to buy your debt. So the prices of bond drops, the yield goes up, and now suddenly the arithmetic for all of the UK budget needs to be relooked at. That creates a political pressure, and then he gets called to account, he gets booted out, and somebody who is competent gets put in place, and then the bond market goes up and the yields come back down again. But this is a natural market. That's almost natural law. You're going to follow that. You do something bad, something bad happens. But now what you have is that the central banks of the world, no matter what Boris Johnson says or does, if he sits in a flipping tutu, those bonds will just stay the same. They will never move, because we don't have a way of holding the governments to account. So we're living in a false market with false prices for the most important market in the world is the bond market. And as a result, we have all this risk that's been hidden from us, and we don't know where the problems are. It is a very, very dangerous situation. And we have a cohort of political leaders right around the world that are I would say they're highly questionable. They should not be in place. I'm not even sure that they're sane half the time.
Well, I often say to people that you have a look at politicians, or they're career politicians. They don't understand how to look. They do, but I just think that they're not worried about it, because they say, well, look, we could just keep printing, and not on my watch. On my watch, we'll just keep printing, and then I'll look good. I'll get my pension, and I'll toddle off into the midst. I don't have to look at a long-term fixing of the problem. So my question to you is, do you think that they'll keep continuing to kick the can down the road, Stephen, or will they just do a complete reset and say, do you know what, all of this debt out there, we're just going to reset it all and come up with a new system?
Yeah, I know, but this is fairy tale stuff, because if you cancel the debt, you cancel the debt, you cancel the assets. A lot of pensions, a lot of savers, a lot of workers are invested in these markets too. You can't cancel one side of the balance sheet and not affect the other. So it's fairy tale stuff to think that will happen in any orderly way. I think maybe a reset. I don't know what that even means. I know a lot of people talk it around and they grab onto it politically. They go, well, reset is the baddie's going to take all our. Another guy says reset is a way of deal with the problems. But ultimately, the problem is if you hand the ability of leadership to print money whenever they want and have no consequences, no consequential actions, what you do is you're opening the door for a despot to come in and make bigger promises to a gullible people who will go, you know what, he looks good, or she looks good, and God, he's going to give me free money for life, and I don't have to work less. This is fantastic, and I don't have to pay anymore, but he does. Brilliant, let's do this all day. And so they bring these people in, and ultimately your liberty gets taken away. These people will never be able to follow through on their promises. They will eventually start to erode your liberties. And then what you have is a very dangerous situation where they try to, they open up wars with other places in the world to try and distract you from their own inadequacies. This is a classic playbook of despots. I hope we never get there. I don't think it's likely that we'll get there. I think we'll probably turn this around. But this is definitely a risk that you face when you start to print money with reckless abandon. And so as an investor, you have to look at this and you have to be skeptical. First off, you can't just be wishy-washy and dreamy. You have to be skeptical. You have to say, do I have insurance for this? And so this is where a lot of our clients come from. They go, you know what, I don't think it's gonna happen, but if it did happen, I have a contingency. It's my gold allocation. And what that means in actuality is, suppose you go forward to next year or something, or March 2022, and the market suddenly drops off like off a cliff. Everybody on your road that you live on or in your apartment block, they're all in on the stock market, either through their jobs or their community, or through their investments or their pensions. And they see a 50% drop in the stock market and it's going down. They psychologically are looking at the next 50% drop coming, that's to come. And they're looking at being wiped out and starting from zero. And that is terrifying to the average investor, to almost anybody. But if you're the only person there holding gold in your portfolio, what will happen is that gold, that 10% or 20% or whatever you decide is right for you, will start to rise as people start to move into safe haven assets. And it'll start to rise. It'll take the sting out of the correction in your overall net worth. You'll still be down. You won't be like the next guy next door. And you'll not be looking at a situation where you go to zero. That's the most important thing. It'll calm your mind. You're not going to panic. And in fact, if you're really smart, you actually might have an opportunity to pick up some assets that are way oversold and are exceedingly of good value, and pick them up in that situation when there's what's called blood on the streets, when people are selling good assets for no money, and you'll be able to pick those assets up, and it might be a great opportunity. So it's the role of gold is not to make money, it's to actually calm you down as an investor, to have that contingency plan, that safe haven investment that's going to protect you, what's called financial insurance. And the reason you don't just want gold, you don't want a proxy gold like an ETF or something like that, or other things like that that you might buy, like rare coins perhaps. You want physical bullion in a vault that's unquestionably yours, that's segregated, that is, let's say, it's separated from everybody else's assets in its own box, and it's allocated in a bar, and if where necessary has a serial number. It's physically there. You can sell it anywhere. And that is going to always win the day. You'll always be able to sell that asset. It's called financial sovereignty. That's the key term to remember. When you own gold, you're becoming financially sovereign. You're in command of your own wealth to a greater degree than most other people.
In the past, we had, for example, when the pandemic started, market dropped 30% in March last year. Nothing much happened with gold. It just sat there not doing very much. Do you think that's because people don't realize what role gold plays when the markets get a bit frothy? Do you think it's a lack of education, or do you think it's building up a bit of a head of steam, and that we are going to have this potential black swan event where gold will suddenly do what it's meant to do, which is be the safe haven in a crisis environment?
Yeah, no, I think I'm not really upset that gold is where it is right now price-wise. I think it's extraordinarily cheap, and I want it to stay this way for as much as possible so my clients can buy more. And I think it's great. I think it's such an amazing value right now, and silver is as well. I think if you need to have gold at any price. If you don't have any, you need to have some at any price. I don't care what it is, what you have to pay for it. Just have some and put it there. And I always tell my clients, I go, if you put your money in gold and you lose money, that's actually a good thing. Who says that because when they're selling something like gold? Everything else is going up. It's not. It's 10% of your portfolio or 20%. Then the other 80% is going up. The thing they're pushing gold down, push everything else up. And that's a good day. That's a good day. So I would say it's extraordinarily cheap right now. I think it's going to be an awful lot higher in the future. I don't know when that will be. I think if you measure it in dollars, and dollars are being printed, then obviously the price is going to go up. I do think there's probably a very, very strong argument to say that the authorities that are suppressing the price of gold. I know that sounds kind of conspiracy theorist, but like, think about it for a second. You're on the podium. You've got a lot of things going on, a lot of big macro risks at the moment. You're doing some extraordinary policies. You have to bring the people with you. And then suddenly gold is behind you and it's shooting up like a star. It makes a mockery out of you and your ability to say that you're in control. So if you're a Fed chair or you're a prime minister, you do not want to see gold going up because it turns you into a liar. And people will start noticing it. So I think it's very much in their interest to keep gold nice and boring and keep it in its box. But I do think that if you have 7 billion people in the world and they suddenly start to question the stability of the currency and they're hunkering down in that cave, then yeah, absolutely, they're going to start buying something like gold and silver. They're going to buy anything tangible that they can get their hands on in order to protect themselves. And so I see gold going an awful lot higher. When we started this business, it was around $250 or something like that. It ended up at $2,000, and it's like 8-fold increase. I think we're in another cycle here. It's at 1,700. You do the math. I think it could be an awful lot higher in the future. And it's a function not so much that gold, suddenly becomes, more valuable in its own right. It's because relative to everything else, it becomes more desirable. And it's always tracked inflation. And if you print money, you're basically telling the world that the gold market is the price of gold is going to be an awful lot higher. And conversely, other assets might be a lot lower as well. So it's extraordinary.
It is extraordinary, but we have the new kid on the block at the moment, don't we, Stephen? And that's called that funny Bitcoins and all those crypto ones out there. There's a lot of what I call the funny money heading in that direction. Is that, do you think, having any impact on people's ability to see the value of having part of their portfolio in gold? I never say investing in gold, because whenever you use the term investing in gold, people want a return. You're not going to get a return necessarily. It's protecting your purchasing power. But do you think that people's eyes have been turned away because of this new digital crypto world?
Yeah, I don't think the people who buy gold for safe haven purposes are the people who are driving the price of crypto. I think the people who are driving the price of crypto are the kind of Gen X. They are easily distracted. If it's on their iPhone or on their phone, they will like to hit buttons and buy something and look at that and show their friends. But they're not really. They don't really have the. I think I've been a little facetious here, but I think they don't really understand the purpose of a diversified portfolio or what that actually looks like. They have an awful lot of challenges.
Yeah, let's talk about that diversified portfolio. What would you say to people is a good diversified portfolio? Because, by the way, ladies and gentlemen, a diversified portfolio is not, I have tech stocks, I have mining stocks, and I have other things. That's the stock market. That's not diversified. Stephen, what would you say is a good diversified portfolio?
Well, I think it's something that is it's relative where you are in life. Basically, the younger you are, the more risk you can take. The older you are, the less risk you can take. And it's you need to have amount of capital to help you through retirement. That's ultimately the purpose of a portfolio. You want to do so tax efficiently. So there's a lot of things that you can do, basically from the off in order to start your portfolio creation. But diversified means that you want to have things that don't move together all the time. So you want to have some winners, and you also need to be comfortable that you've got things that aren't working out, because you're looking to create a portfolio that is what Ray Dalio, he's a very famous investor, will call an all-weather portfolio. And in that, you've got to play a role for all the major asset classes: stocks, bonds, currency, property, and metals. And so really the actual allocations are based on where you are in life. And so I've got clients, cherished clients, who would have a significant amount of their wealth in precious metals. And I would say, you know what, you've got a little bit too much there. You're a bit of a one-trick pony. What happens if the gold market falls 50%, or what? And he goes, well, I don't really care. I only need 50,000 a year. If I have 1 million in my portfolio pot, I actually don't want to lose the whole pot. But I know if I have it in something like gold and where they're printing money, the chances are it's not going to get totally eroded in value. So I'm quite happy to keep that a lot of it in precious metals, because I just want to be able to write myself a check every year. Other people, there's an old Wall Street adage that says put 10% of your money and hope to God it doesn't work. And I love that. I think it's really, really good. So, I would say you start at 10%, and in times of uncertainty, you want to go to maybe 20% precious metals. And if you were to look at all of our clients, we have about 300 million in assets under management now, about 10,000 customers all around the world. And they're probably around 75% gold, 25% silver. Silver is an interesting one. It's very, very, very inexpensive at the moment. I think if gold gets released from its suppression, I think you're going to find that silver will follow gold. If gold goes up 10%, silver will go up 20%. Conversely, it's twice as volatile. If gold goes down 5% or 10%, silver will drop twice as far. So I think, though, it's a good idea to have an allocation of silver in your portfolio. And I think, but gold is your banker. That's the one that's going to save you and really calm you down when those markets start to sell off at some point. Which I don't know when that's going to happen, but I think it's not almost a certainty.
Almost a certainty. Well, I want to ask about your products, and one of them is direct access gold. What is direct access gold?
So that's an innovation. Most dealers in the world will store your metal in a kind of a generic fashion. So you own, let's say, a kilo of gold. They'll put you in a room, your kilo of gold, in a room with 1,000 other kilos of gold. You won't know which one is yours. And it's stored all together. And you have a spreadsheet that explains who owns what. At GoldCore, we have everything actually segregated out. So it's a specific bar in a specific box in an account number under our system. And you can go into the vaulting company, let's say it's Loomis or Brinks in wherever, and you can log into their system and actually see your bar listed under their records under your own specific sub-account number under the GoldCore client assets account. So you know when you buy it off us that it's actually sitting there, and a third party, the actual vault, has confirmed that that account number has that bar with that serial number, and it's there. It's unquestionably there. So we have it all segregated out. So direct access gold is something we offer in Zurich. It's for kind of it's a specialist program, but basically what it is a special type of contract. That means that if GoldCore something happens to GoldCore or something happens to the system, the internet, you can't contact GoldCore. And what happens is you can then go to the Zurich vault and present them with a contract, and we will have given them your name in advance, and they will be able to say, you know what, let's contact GoldCore and see if this request from Kerry to access her gold is real. And if they don't hear from us within, I think it's 15 days, they will automatically take your instruction directly for the first time to release your gold to you. So it's like a safety net that takes into account where if GoldCore is unable to transact. So it's a three-way contractual agreement between GoldCore, the vault, and the customer. So allows the customer to bypass GoldCore in extraordinary circumstances and access their gold directly with the vault. So it's direct access gold, but only if GoldCore becomes unable to operate for any reason, for that black swan, for something we have not foreseen. And we don't know what the world holds. So we've taken every precaution to protect people's assets. None of the assets we store are on our balance sheet at all. So you're never a creditor of GoldCore. But what if some despotic government comes to power in Europe or somewhere like that and says, you know what, we're banning even the communication of gold. You're not even allowed to talk about it, or we'll cancel you, legally. And suddenly people are left, wondering, they've got a piece of paper or they've got some sort of an online account, but suddenly you can't access it because somebody said so. This direct access gold product will allow you to go to Zurich. It only works for Zurich at the moment, and actually get access to your metal in those extraordinary circumstances. It's a very specialist product. It's not our primary product, but what it does show is because we store metal properly, we store it on a segregated basis. That's our default, and almost nobody else does that. And you can validate it with accessing the vault's records. Everybody can do that, and this contract allows you to actually walk up to Zurich and take your gold out without a direct say-so from GoldCore.
But I can actually go and buy gold. I mean, I have physical gold. It's sitting in a vault. Why would I need direct access with GoldCore when I've got my gold sitting in a vault that I can walk in with my little fingerprint and go, right, I want to take that out now?
Yeah, and there's nothing wrong with that. I do think that you have to be careful on who you trust, like what those safety deposit companies. I would be very cautious on who you work with in that regard. There are some who I wouldn't necessarily rate at all. I don't think are run correctly, and they would also be places where you might find other elements and other clientele of those facilities. Storing assets that are haven't been declared or might be illegal, ill-gotten gains and different things. So you have to be very careful that those places are run properly by very, very respectable people who are very discerning on who they deal with. Otherwise, you could be storing your assets in a place where people who aren't as nice as you store assets. So that's the first thing. Secondly, gold is something interesting. There's something interesting about it. If you go to sell that gold, you need to know that it's been inside the chain of integrity, or when you do sell it to a dealer like GoldCore, we have to test it again and make sure it's actually what you say it was, and you haven't replaced it with some tungsten or chocolate bars or something like that, So by having it stored professionally, you're going to be able to get on the phone and sell it in a second. If you have it stored outside the system, you have to get it moved into the system, tested. There's costs, expenses, and time. And insurance. Are you insuring it properly? Should something happen? So when you have professional bullion, if you're storing a significant amount, silver, like we have customers who own tons of silver and large amounts of gold, they can't really store that at home or in a safety deposit box facility. So they store it in professional storage in Zurich, in London, in Dublin, in Hong Kong, and Singapore, and places like that, New York. But these are designated bullion storage facilities, and they don't buy and sell bullion. Some of these safety deposit boxes try to, they buy and sell gold as well. Who's to say they're not going in there and replacing, things? I don't know what they're doing. So you got to make sure that these people they're good operators, and I think you have to be very discerning in that. So you don't want to go cheap on your gold. This is your financial insurance product. So store the bulk of it, I think, in a vault, and some of it at home. And if you want, in a deposit box facility.
All right. So last comments from you, and I'm just going to read one of your quotes, which I love, but we're running out of time. You say, Stephen, all business primarily comes down to one single formula: taking unique knowledge from where it resides and delivering it to where it is needed.
Yeah. I love entrepreneurship. I love business. I've been involved in so many different things, and I think it's a nice simple way of describing what it is. So basically, what I'm saying there is, and I say this to school kids if I'm giving a talk on entrepreneurship. It's like you have to become, if you become an expert in some area, in something that's marketable, that's needed to solve a solution, and that could be anything. It could be a lawyer, it could be a surgeon, whatever it is, or an architect. Once you have that expertise, you have to be able to deliver it to someone where it's needed. And marketing is the act of informing people that you have this expertise and asking the questions that that there's a solution to the problem that the market has or doesn't even realize it has. And so and then technology is around encoding that information and making it available and delivering it and putting a bow on it. So all business, as far as I can see, falls into that. So become an expert in what you do, package it up really, really well, and then be able to deliver it as efficiently as possible and get paid a premium for doing so. And that is an efficient way of looking at all businesses and all of the components of business. That's what we do at GoldCore. We are unassailably the best at what we do. And I'm not shy of saying that. There's no company in the world that can do what we do in terms of delivering value for money, quality product, and a fantastic experience in terms of our clients. We ask every customer, how did you find the service? Give us a comment, give us, out of 5 stars, And all of those comments go up on our website, and they're there for the public to see. We have to live with the good and the bad. Thankfully, we're 4.8, 4.9 out of 5. Over 12 years, we've been polling our clients. We have like 2,500 reviews. They are universally positive towards GoldCore. Really, really love our clients, our staff. None of our staff are paid to sell or to make, or they don't get paid a commission on a sale. When a customer gets on the phone, they're going to treat you, if you're doing $5,000 or $5 million, you're going to get the same level of service. They're all about providing a solution to you, because we're the experts. That's what we do, and we're going to deliver that to the customer. And we're going to treat you like we want to be treated as well. That comes across in the reviews we get. We celebrate them here as a team. We read them out at our all hands meetings, and it's something that we define ourselves and what we're about. And if we don't think it's a fit, if we don't think we have the solution for you, we're going to tell you we don't have it, or maybe we're not the company for you, or maybe you need to look elsewhere. It's not about making money or at all costs. It's about having an honest exchange where our expertise solves a problem for you.
There you go, ladies and gentlemen. Their expertise solving problems for you. And as he said before, it's okay not to know. And if you don't know and if you don't understand, make sure you check out GoldCore. That's what they love doing. They love helping people with precious metals. That is how they're doing. That's why I wanted to get you on today. And Stephen, I think we need to get you back next year. Let's see what's happening. Let's hope that Black Swan event doesn't happen. But as you say, it's getting awfully frothy out there, ladies and gentlemen. So Stephen said, make sure you have a portion in physical gold.
Well, Kerry, I think you should do the next interview in Ireland, because I'm inviting you over here. Yeah, absolutely. And you can come here, and we'll find a great place and do the interview here, and have a great old time.
Let's do an interview in Ireland. I'd love to. Unfortunately, at the moment, it's very difficult to get out of Australia. Once a penal colony, or no. I'll get to you. Just might take me a little bit longer, but hopefully next year things open up a little bit more. But it's been an absolute joy to talk with you today. Stephen Flood, CEO of GoldCore. Check them out, ladies and gentlemen. I'll put the links down below. Make sure you hit like and subscribe, and we'll bring you more great guests in the future. Thanks for joining us on the Gold News channel today.